Welcome to our channel. Today we will be diving into exchange-traded funds. ETFs are a type of investment fund that can be bought and sold on stock exchanges. They are similar to mutual funds, but they trade like stocks, which means they can be bought and sold throughout the day. ETFs typically hold a basket of underlying assets such as stocks, bonds, or commodities. This provides investors with diversification because they are invested in multiple assets instead of just one or a few individual stocks. The goal of ETFs is to track the performance of a particular index or sector. For example, an ETF that tracks the S&P 500 index will aim to provide investors with the same return as the S&P 500. One of the main advantages of ETFs is their lower fees compared to traditional mutual funds. They also have greater liquidity because they can be traded like stocks throughout the day. This makes ETFs a convenient investment option for many investors. ETFs can be bought and sold through a brokerage account just like stocks. When an investor buys an ETF, they are buying a share in a fund that holds a basket of underlying assets. The value of the ETF is determined by the performance of the underlying assets. There are many different types of ETFs that provide exposure to different asset classes, sectors, and regions. Some popular examples include ETFs that track the S&P 500 index, ETFs that invest in technology stocks, and ETFs that invest in emerging markets. However, investing in ETFs also comes with risks. ETFs are subject to market risk, meaning that if the underlying assets decline in value, the value of the ETF will also decline. Additionally, some ETFs may not track the performance of the underlying assets perfectly, which can result in a tracking error. There is also a risk of concentration if an ETF invests in a single sector or industry. For example, a technology sector ETF may be more volatile than a broader-based index ETF because it is concentrated in a single industry. In conclusion, ETFs are a convenient and low-cost way for investors to gain exposure to a variety of underlying assets. They provide diversification and liquidity, but also come with risks such as market risk, tracking error, and concentration risk. As with any investment, it is important to do your own research and consult with a financial advisor before investing in ETFs. Thanks for watching, we hope you took notes and most importantly we hope you come back for more knowledge. Make sure you like and subscribe.